Breaking news right now, the Department of Labor releasing the jobs and unemployment numbers for February, and the number of jobs created higher than expected, which is bad news for the Fed's fight against inflation. NewsNation business contributor Lydia Moynihan with us now. Lydia, 100,000 more jobs created than expected. So what does that mean? Is that equivalent to another interest rate hike?
Chatting with one analyst who said, never before have so many people been hoping for a bad jobs report as they are today. Yeah, last month, I want to note, it was almost more than double what we expected. We had 517,000 jobs added as opposed to 187,000 added last month. This month, we were expecting about 225, came in a little bit hotter at around 311,000 jobs. So as soon as this report came out, we did see Dow futures, NASDAQ futures all dipping a little bit lower, but there are some sort of kernels of news that the market was glad to see in this report. The overall unemployment rate has actually gone up from about 3.4% to 3.6%. That is seen as more people are trying to get back to work, that the labor force participation rate is higher. That's something the Federal Reserve has said they want to see. That's something markets want to see. And then another thing that markets wanted to see is that wage growth had actually slowed. The fact that people have been making so much more money has been an inflationary factor. So if wage growth continues to slow, that could be seen as a good thing in terms of whether or not the Federal Reserve raises interest rates. So the headline number, obviously much hotter than expected, but there are some sort of kernels in that report that the markets are glad to see. So I think the futures are climbing back a little bit after that initial drop when this report came out.
Yeah, I heard that futures are flat right now, but Fed Chair Jerome Powell says he wants to see less hiring. You just mentioned that they want to see lower wages. So are we on the cusp? Are we more on the cusp of a recession based on these findings, based on what we're seeing and what we need to see to lower inflation than we were before, when hiring was actually up and also wages were very high?
One thing that I need to note as well this morning, we haven't discussed yet, is everyone on Wall Street is abuzz about this Silicon Valley bank. So that is a big story that's unfolding right now. There are concerns that there could be a bank run. So that's one thing that is sort of filtering into Jerome Powell's mind about what could happen. That's definitely something he's going to be keeping an eye on. And so I think that's another huge macro factor that's at play right now. So obviously the jobs report is big, but depending on what happens with the Silicon Valley bank situation where a lot of people have pulled their money out, it's unclear whether that bank is going to go belly up. That's according to a lot of people we're speaking with. If that really is a situation that, the bank goes belly up, I think that could be something that keeps Powell from raising rates. So a lot of factors obviously at play. Jobs report is one, but that Silicon Valley Bank is another one that I really want to bring attention to as well.
Yeah, tumbling for a second day today, losing 60%.
They just halted this stock because it's got, from a $300 stock now to, I think, 40 last I checked, or something. I mean, precipitous drop. So
yeah, that's huge. That's a crisis. All right, Lydia, thank you so much.
My goodness, bank runs. That's just the sort of thing you're not supposed to see anymore. We're supposed to have enough controls on the economy to stop that before it happens.
Especially in Silicon Valley.
That is incredibly startling.
Thank you for watching. Go to newsnationnow.com to find NewsNation on your television provider. And don't forget to click the red subscribe button below to get more of NewsNation's fact-driven, unbiased coverage.